Hello, good afternoon, everyone. This is Frances Nichols from Oxford Economics. Very warm welcome to you all. I should say good morning as well, because I know we've got a number of you from around the globe joining us on the call for the what is, in a sense, the launch of our Middle Eastern Cities services. A lot of you will be familiar with Oxford Economics, the work we do at the macro level, industry and city level, and we really are, forecasting, of course, at the city level on every continent. We were keen to present to you today some of our latest findings from Middle East on the Middle East. Graham Harrison will be taking you through that, giving you a flavor of that. But really, today is about introducing you to the service, letting you know a little bit more about it. And of course, over the course of the next year, then you will be receiving more updates from us on our city's work in general and specifically on the Middle East. So Graham will be going through Middle Eastern cities, global powerhouses in the making, driving the region's economic diversification. Just a few housekeeping rules at the beginning. You'll see my name at the top of your screen, Frances. Now you can direct your questions, any questions you have on our views, on our services, you can direct them to myself, or if it's easier, you can contact the host as well who invited you to this. So there'll be some time for questions at the end. It'll be a sort of 20-minute presentation. And then we also look forward to hearing from yourselves. So Graham, I'll hand over to yourself.
Thank you, Frances. And hi, everyone. As Frances has said in the title, this presentation is really introducing you to our new Middle East Cities service. And the title I've chosen, Global Powerhouses in the Making, it's really just identifying these Middle Eastern cities in a global context and their growing economic importance in the world economy. And also the second part of the title, it'll be these cities that will be the drivers of the Middle East economic diversification. So as these economies try to wean themselves off their dependence on oil and gas,
remember how we
it'll be the cities that are key to that. So the main focus of the presentation is really just to introduce you to the service, present some of the key findings from the service. As Frances said, we intend to do more webinars like this over the course of the year and present some more of our deeper thinking. This is really just an initial snapshot of the findings from this service launch. And at the end, I provide contact details for Frances should you wish to follow up anything in more detail. Just to introduce the service, obviously there's huge interest externally in the Middle East economies, and there has been for several decades, particularly around the resource sectors of these countries. But up until now, rarely have the business opportunities been quantified below national level, even in very big urban economies like Riyadh, Dubai, and Tel Aviv. What that has meant is, investment, marketing, location decisions have often been made without the same degree of market intelligence as has been available elsewhere in the world. So this new service and some of the findings I will show should start to address that intelligence gap. What's particularly important about the Middle East and a city service is that national and city data and outlooks can be very different. National data can be inflated by the wealth of the resource sector, and that wealth, either it's saved or either it's not particularly well distributed amongst the population, amongst the parts of those countries. What's different about cities then is the cities don't tend to be home to the resource sectors, but they will be home to the new emerging non-resource industries which will transform the Middle East economies and diversify and reduce their dependence on oil and gas. And really this new Middle East City service we feel can help businesses navigate what opportunities urbanization and diversification of the Middle East can bring. So about the service, for the last few years, Oxford Economics has been ramping up its portfolio of subnational cities and regions forecast services, and this Middle East City service is the latest addition. It covers the 12 main countries in the Middle East and the 32 largest cities. Those cities have been picked based on those which are above a minimum population threshold. For any corporates interested in the wider MENA region, we have a complementary African city service, and it's possible to access the data for the North Africa part of MENA from that. For those of you who are less familiar with Oxford Economics has a suite of global macro and industry forecast models, and all of our subnational cities and regions services link to those. So our forecasts for the cities of the Middle East are linked directly to our forecasts for the national macroeconomies of the Middle East and their national industries and into the global economy. So, for example, developments in world oil prices, how those feed through to the macro economies of the Middle East will also feed through to cities. This slide presents the coverage across the 12 cities, or the 12 countries and the 32 cities. So you can see all of the Middle East is well represented, and some countries in particular are covered in more depth given the number of large cities, Iran in particular. You can see the geography stretches from Israel over to eastern Iran and south to Yemen. I just want to spend a little time talking about which variables are covered by the service before I move on and present Oxford Economics' views on the outlook for Middle East cities. There are around 4 main modules. So we have a detailed demographic module that looks at total population of cities, 5-year age bands, births, deaths, net migration. I think demographically the Middle East is a dynamic region with lots of inward migration, young populations, and it is important to understand those demographics and what they mean for business and the potential growth of the economies. We next have an industry module where we have employment and GDP by broad sector, and that's important for thinking about where are the industrial growth opportunities, how are the economies likely to transform and diversify, and which industries will be powering the growth of these cities. We have a detailed income module which looks at total household income in the cities, average household income, and then the number of households by 12 detailed income bands from which it's possible to aggregate household numbers into high, medium, and low. And that's important for thinking about particular consumer products where you might feel that there needs to be a certain critical mass of high or medium income households, that this data will allow you to look at the cities in this way. We have a very detailed consumer spending module that breaks down total consumer spending in cities across 40 different spending categories. So you're able to look at across the Middle Eastern cities, what are the largest urban markets for spending on food, communications, financial services, vehicles. And what you find is, spending patterns vary across cities based on local cultural preferences, based on how developed that city is, or national consumer spending patterns. So it's not just the case that the largest consumer markets are in the cities with the largest overall consumer spending. Differences in consumer spending patterns do matter. I should say that all of those variables I've described are available for each of the countries and each of the cities. They can all be directly benchmarked because they're available in local currency and US dollar terms, and in fact they can be benchmarked across all of the global cities covered by Oxford Economics Cities and Regions Service. There's historic data annually back to 2000, and we produce long-term annual forecast to 2030. But of course, you are able, if you're interested in the short term and medium term, you have all of the annual forecast years. I think the first key finding from this new service is really the growing economic footprint of Middle East cities. So today, the 32 cities account for around 66 million people, 1.3 trillion in GDP, and you can see for yourselves some of the other metrics. But it's really the change in the growth in these cities that is striking over the next 2 decades. So by 2030, there will be 25 million more people living in these 32 cities, taking the total up to 90 million. Annual GDP growth of these cities will average over 4%, so well in excess of growth rates in US or European cities. There will be 3.5 million more high-income households, and that's driven by our outlook for growth and incomes and the distribution of that income over time. And by 2030, the consumer market of these 32 cities will reach 1.2 trillion US dollars in today's prices and exchange rates. That's more than double today. And for anyone involved in the sort of the real estate office sector, there are forecast to be a doubling in the number of financial and business service jobs by 2030. One thing I've tried to do is, given the wide range of variables, how to decipher, how to pick out key messages from that. It's not always an easy exercise. So what I've done here with this slide is I've picked out some key variables that that we at Oxford Economics believe measure the opportunity, the business opportunity represented by these cities. And then we've weighted these variables to come up with an overall rank. So we look at variables like the population in 2030, level of GDP, number of high-income households, absolute level of consumer spending, and some almost sort of per capita standardized GDP per head or average household income. And we've weighted those indicators to come up with this top 10 list of what we define as opportunity cities for business. And you can see the top three here are Riyadh, Saudi Arabia, Dubai, and Tel Aviv. Now, there's quite a lot of differences between these cities in size. I mean, Dubai would be an overall a richer, higher income city than Riyadh, but Riyadh in 2030 will be 3 times the size in population terms and double the size in GDP. Tel Aviv would be amongst the most advanced in terms of its economic structure, but it's still sizable at the metro area of 4.5 million people, and even still a larger GDP than Dubai by 2030. And then next you have in 4th place Tehran, which is a large city, 8.3 million, but not as rich as those others in the top 3. Just for your benefit, as I said, it is possible to also look at the other cities as part of the MENA region, but the key message shown by this map, which captures the forecast level of GDP in 2030, shows that it's the Middle East cities that are relatively dominant over the North African counterparts. Cairo would be the biggest economy in North Africa by 2030, but there are several others in the Middle East that are bigger than both Cairo and the next largest in North Africa. It's important to look at where cities rank today for the corporate opportunity today, but also to try to think how will the ranks of those cities change over time. And on this slide we have a chart of the number of high-income households today and the future change over the next 2 decades. So today Dubai, across all of the Middle Eastern cities, has the largest number of high-income households at just over 400,000, but Dubai will be overtaken by Riyadh by 2030, which will come to have the largest number of high-income households. Tel Aviv is currently 3rd and is predicted to stay 3rd, but other cities are catching up fast, such as Jeddah and Abu Dhabi. Now, there's a different ranking when you look across different variables. This map here looks at the growth in financial and business services GDP. The size of the circle measures the absolute change. The intensity of the colour measures the growth rate. Today and still by 2030, Tel Aviv will be the Middle East's leading professional services centre. So that's measured by its financial and business services GDP, not necessarily in terms of jobs, but in terms of the wages and the profits generated by that sector. And lots of other cities aspire to be a financial centre, and there will be catch-up with Tel Aviv, but still by 2030, Tel Aviv will be the leading professional service centre across the Middle East. Of course, given the nature of the national economies and given the stage in development of many of the Middle Eastern cities, industry will remain an important and growing sector. And across most of the Middle Eastern cities, we expect urban industrialization to continue. The only cities where that isn't predicted is in the cities of Israel and in Lebanon, where manufacturing jobs are actually forecast to shrink in overall terms, whereas in most of the other cities, manufacturing employment is forecast to rise. Now, I should say industry here is a broad definition which includes construction, manufacturing and utilities, but clearly some of the big centres such as Riyadh, Dubai, Abu Dhabi, Tehran are forecast to create significant numbers of extra industrial jobs. As I said earlier, the demographics of the Middle Eastern cities are very dynamic. There are 2 factors, helping to power the Middle Eastern cities' growth, and one of which is the growth in the labour supply. And the region's cities benefit from two factors. The age structure means that they still have a positive boost to population from natural increase. So even as birth rates decline, there's still a natural growth in these cities' population from natural increase, which is the difference between births and deaths. But equally, many of these cities depend on migrant labour to fuel their economic diversification and growth in construction and growth in services. And over the next 2 decades, we forecast migration will continue to be an important driver of population growth especially in the fastest growing cities such as Dubai and Abu Dhabi, but also in others such as Kuwait. Given Oxford Economics' wider suite of subnational city forecast models, we thought it would be useful to benchmark the Middle Eastern cities in a global index. So in this table we have the ranks across our total number of cities covered, which is 770 across a range of metrics. And what I've done in the first block of data is I've highlighted in pink cities and metrics where they rank in the top 100 across all of the world's major cities. And I think a rank in the top 100 is a good achievement given the scale and size of US, European, and many of China's large cities. So I think it's a positive feature that these cities do feature in the global top 100. So you have in 2030 Riyadh will be the 49th largest city in population terms. Dubai will have the 15th highest share of households which fall in the high income brackets. Kuwait City will be even higher at 5%. Other key variables are, Tel Aviv will be in the top 100 for the number of financial and business services jobs. So I think these cities do punch their weight in global terms, and increasingly so over time. The second block of data looks at how the global ranks of these cities changing, and you can see by the green arrows and even the upward yellow arrows how many of these cities are moving up the ranks. So Dubai will move up 65 places for its population, 32 places for its financial and business services employment. This next slide then tries to place some of the Middle Eastern cities against their counterparts across the world, again just to give a place of where globally these cities rank. So by 2030, Riyadh will be as big a city in population terms as Seoul in South Korea or Ahmedabad in India. Kuwait City will be equivalent in size of its economy to Brisbane in Australia or Mumbai in India, even despite Mumbai having a much larger population. I think another finding of note is by 2030, Riyadh will have as many high-income households as Singapore, one of the most lauded urban economies across the world. I think the wealth profile of Dubai by 2030 is well illustrated by it having as higher percentage of high-income households as Houston. And to get a sense of the scale of the consumer market in Tel Aviv in 2030, it will be on a par with both Cairo and Bangkok, again, two cities with much larger populations. I think on a note of caution, and maybe from an academic point of view, it's interesting to look at what are the drivers of economic growth across the major Middle East cities and how that differs with cities in other parts of the world. As I said, the demographics are a key feature of the Middle Eastern cities, and they're helping to fuel growth in the service sector through immigration and to foster economic diversification. But one drawback of the Middle Eastern cities' diversification and growth is it's heavily reliant on people, on migration and on employment growth. The actual contribution from many of these cities is limited from productivity. If you compare that to the other selection of cities shown here, Shanghai, Singapore, London, their growth is being fueled much more by productivity, which is generating higher wages for its citizens and its workers. So it is a point of concern for the Middle East that it's not yet on a high productivity growth path, although that's to an extent partly to be expected as it diversifies away from very productive resource sectors to less productive, more labor intensive sectors like retail or tourism. I just wanted to flag too, obviously a key issue today across oil producers, many of which are in the Middle East, is the current level of the price of oil and some of the uncertainties over what the future holds for the oil price. Oxford Economics has undertaken an analysis to look at what the impact would be on GDP growth under different oil price level scenarios. The blue bar in this chart is the baseline projections, and the other bars represent the impact at different oil price levels. So clearly a major oil producer like Saudi Arabia would be negatively impacted by prolonged low oil prices. Other countries that are net oil importers obviously stand to benefit from lower oil prices and the bonus that provides for both households and for business. Now clearly these these impacts would feed through to our Middle East cities, given the national and the urban economies still are heavily dependent on oil and the world price of oil. So through Oxford Economics' framework of models, through the linkages of our city models to our macro models to the global economic outlook, it would be possible to look at what this would mean, and that could be particularly important for real estate prospects or any aspect or variable of interest to you that we cover. So that's the end of the presentation. I look forward to any questions you have or follow-up in due course. And here are the details of Francis, who introduced the presentation. So if you do have any questions that you don't want to ask now, please do bring those up with Francis. Thank you.
Graham, thanks very much. Just a couple of questions this end. We talked about high-income households here. How are we defining that?
Yeah, so there is a mix of definitions, but I think the standard across urban and household income research would be high income is any households above $70,000 US, and that's throughout our forecast. That's expressed in today's prices and exchange rates.
Yeah, okay, thanks. And regarding scenario and risk capabilities, perhaps you could talk a bit more about, the capabilities of the service with regards to risks and scenarios.
Yeah, so I've just touched on that point. Obviously, one of the major risks to the Middle East today is the price of oil. And what it would be possible to, Oxford Economics runs a global macro scenario service, and one of those scenarios will be, a lower price of oil, which is good for some economies and bad. And given the linkage of our city models to our national macro and national industry, it would be possible to feed through an oil scenario through to our Middle Eastern cities.
Great, thanks. Just seeing if there's any other questions coming through. Yeah, so just a note to everybody, you've got my contact details there. Oh, here we go. We've got one that's come in. Yes, thank you for that. Yeah, they'd be keen to learn, Graham, more about the sources being used for the data across the region. That's a good question.
Okay, yeah, what we plan to do very soon is to produce a methodology document that will, as well as explaining our approaches to forecast, will list our data sources and will explain where there are data gaps, how we estimate and fill those gaps. It's clear, the data at a subnational level across the Middle East isn't perfect, but we have exhausted all possible sources, and I think we feel, having been working on this for over a year, we feel we have accessed all of the published data, but certainly in this methodology document we can share data sources and our approach to estimate gaps.
Thanks, Graham. To the gentleman who sent that query, we will send that to you. We should have I've got your contact details here, so we'll send that across to you as soon as we have that. Okay, Graham, well, thanks very much. Thanks very much for that. As everybody's aware, you've got my direct contact details, but you can also speak to your representative in the region, because I know we've got a number of people across the globe who've dialed in. So thanks very much, and look forward to speaking to you again soon on one of Oxford Economics' webinars. If you'd like to find out about our events here in London or across our offices globally, then also do get in touch. You can find these information on our website as well. Thanks very much.